Well, good evening, traders. I am speaking to you from England after a 7.5 hour flight this morning, landing at 6:30 in the morning UK time, which is 3 o'clock my time, and a 5 hour drive from London to Manchester. I'm feeling a little bit jet lagged, if I'm honest, but I thought I'll crack the week off with a quick hit review video. I haven't done one in several weeks, obviously with the move and everything that's gone on there, blah, blah, blah. What I'd like to do then is just crack on with a few, not so much trading opportunities, but some things that are happening within the market. So I'm going to start off really with the Euro New Zealand. There isn't really too much here, but what we do have is we had this major level of structure, just major for me because we saw a major reaction at that point. So we went higher, and you can see we kind of shelved off here. And then what we did is boom, we started making our way lower and down to this point just here. As you can see, little low and tight flag that was input just there. Boom, a move to the downside. Now, very, very importantly, my rules state that we must come down to test the closes of the candles right here, and we did not. So I can look at this as a simple pullback trade. And what are we doing right now? We are pulling back into this previous low and tight flag, or this previous structure level, however you want to look at it. And typically at the middle of these, or at least the wicks of these, are the areas where you want to be looking for those shorting opportunities. Now, unfortunately, I don't really have a great deal here. What I will say is this candle here, we can get it right, boom, this great big red candle is a lower low, lower close candle within the wicks. Okay, and it does give us a high probability of coming lower down to our targets. For me personally, it's not good enough. I would like to see a double top or a rotation pattern there. Let's drop down to the 240 though. Boom, in actual fact, boom. Yeah, look at that. Missed that on the first go. Let's have a look, see. Right there, guys. Look at that. Double top within our kill zone, and also get rid of that. So what did the market do? Move up, we double topped, held structure, break and close below our V point, pull back for a 2618, and now this is setting up for a move lower. Actually now it looks quite a nice trade. Do have a nice 16800 psychological number here on this particular trade. So at market opportunity, what would be the reward to risk if you was to get involved? Well, you need your stops and ATR above. For me personally, I'd go an ATR above the first test, which would be 40. You crazy, 40. Okay, there's 40. Okay, make that red. And look at that, guys. If you'd entered in on the second candle, 1 ATR above would have meant that you would have not have been stopped out, and targets all the way down to this point. So an opportunity there on the Euro New Zealand. Not one for me. Not one for me. Not high probability enough for me. This double bottom here worries me a little bit. I do think that we will actually come down and hit those targets, but I can't take these opportunities when we've already double bottomed. But an opportunity there for you nevertheless. Moving on, what else do we have? A beautiful opportunity, and I am kicking myself again because I missed my bloody entry. This is what you get when you go on holiday. Not only do you spend 10 grand on holiday, but you end up losing more than that in trades that you actually miss. Euro Aussie. Nevertheless, doesn't matter that we've missed our optimum entry, guys, because if we have a high probability that price is going to go from one direction to another, well then we have a higher probability, more than a 50% chance of that happening. So therefore, we can then drop down the time frames and look for entry reasons. So let's just see what's going on here. I'm going to put in a structure level like that. And as you can see, 1, 2, 3, lovely structure level. I did have a win on this last week, I think it was. Can't remember what it was. But anyway, trend line structure. I absolutely love trend line structure, guys, because look, boom, boom, double top, 2618, another test, boom to the downside, and this down here is another double bottom. Within these channels, I repeat, within these channels we see rotation patterns, and they provide an awesome reward to risk. I've already spoken about over the past few weeks how I'm going to be trading a percentage of my account, and these I'm going to show you how you can risk just 0.5% and gain 1.5 to 2% on one single high probability trade. And it's right here, guys. Look, how many tests have we had? Oops, 1, 2, 3, 4, 5. Is there a high probability we were going to come up for a 6? Well, if we did, is there a high probability we're going to see a reversal down to this level, considering that we are descending this trend line? And the answer is yes, absolutely. This is where we want to get involved with those high probability trades. I'm going to show you an awesome one right now. Down to the 240. Okay, so what I'm going to do is redraw out the trend line. It is important for me that the trend line is correct and on the closes of the candles in every time frame or the time frame that I'm going to take the trade on. Okay, so on the closes of the candles, the most recent close of the candle is here, and then this just needs to come down a little bit here. Okay, so you can now see, zoom in a little here on the 240. Look at what we actually did. This is a double top right here, double top right here, and the second test came in to test our trend line structure. Not only that, but we were overbought with divergence. So I'm just going to drop down to, I thought I actually dropped to the 60. Let me drop down to the 60. There you go, you can see this thing better. Let me redraw out that trend line structure, see if it's still correct. Okay, for this one I would need that to be up there a little bit more. Okay, it's a little bit awkward here on the 60, but you can still see that double top and it is still valid. So I'm going to do this from the 240. Crack on with this. Okay, so double top. So what does that mean? Well, since the trend line is descending at the top and the bottom is holding, there's a lovely double bottom at the bottom, then there is a high probability that we are going to come down to retest this level. What does that mean in terms of risk to reward? Well, I would have got involved on this yellow or green candle just here, because that shows a structure hold. So I would have been involved here. Stops an ATR above the first test, which is 32, which would have put me up here at 102. I would have been a few pips back because of the psychological number. So I would have been 163.10s. Can we get that right? 163. 163.11 is close enough. Okay, there's red. That's your entry. There is your reward, and I talk about these all the time. There are companies out there that are very, very happy to go ahead and just take a one-to-one reward to risk, and that is absolutely fine because there is no right and no wrong way to trade. It is quite simply what is profitable for you and what is what's appropriate for your type of risk. If you're a very, very cautious trader, then you're going to want to only take the very, very high probability trades. The chances are that those very high probability trades, unless you're a very good all-round trader and know how to trade flags, fibs, breakout patterns, trend lines, advanced patterns, the 5 range, anything like that, unless you're completely competent in all of those, it's unlikely you're going to get a very high probability trade with a great reward to risk. So in my opinion, if you're going to trade, be a good all-round trader. It will take you a lot longer. It is incredibly difficult, but look what can happen. I teach this within the training course. Look what can happen here. Now, we haven't hit targets, of course. However, it is a high probability, 63 pips. And we're looking at a reward down here of 276. Now, I've stopped trading in terms of pips. I now trade a percentage of my account. So what do we have here? 6, 12, 18, 24. This is over a 4-to-1 reward to risk. So if I was in this trade, which I missed, but for my 0.5%, if it hits, I get 2% back. That means 4 losses in a row. I'm already off to a cracking start for January. I'm going to show you a trade that I'm in at the moment as well. But very, very high probability trade. So is that it? Is the trade over? Can we do nothing else with it? Well, no, we can do something else with it. Even though we've missed our optimum entry, there is still more that we can do. So what there is, we had a move lower, a pullback, and then a move lower again. So now we have a 3-point move. I'm recording, shut up! So now we have a 3-point move. So since we have a high probability of coming down to test this structure area, and we've just had a 3-point move, we will implement our very simple trend continuation strategy. So we highlight the outside return, and we pay special attention to the wicks, which is our first chance entry, our second chance entry, which is the body, and our last chance entry, which is going to be where we look for the rotation patterns as well. So, and we look for double tops, double bottoms, they're the most common. We also look for head and shoulders. We look for flag patterns. Okay, guys, this could be an awesome flag. I don't think it's going to be, but flag patterns, directional move, just like this. And then we look for that trend line structure coming into the wicks, just like that. And boom, the break to the downside. And guess what? If we get a flag like that, and you know, I've just shown you a 4-to-1 reward to risk. If we get a flag like this, and I'm just going to spend a minute drawing this out. So here's the flag, boom, coming up into the wicks here, which is where we would look for our entry. Then that means that my stop loss would be there. And I'm just going to make that red. And my reward is going to be down here. Come on, computer, update. And this again ties in with the fact that you don't need to get your optimum entry, because if we have confirmation a trade is moving in a direction, a lot of the time we can be a little bit more aggressive, or we can wait for trend, or we can wait for a flag pattern or anything like that, and just look if this turned into a flag. I don't think it's going to be, but it does happen. Then we would be trading 50 pips of risk for 173, still offering you a 3.5-to-1 reward to risk. So guys, you know, monitor these trades. If it means you're spending 2, 3, 4, 5, 6 hours sat by your chart waiting for the confirmation for the entry, then that's what you do. Because guess what, guys, you only need 1 or 2 winners a month to throw your account, say 2 or 3% into profit. And depending on your account balance, trust me, that is a huge amount of money over the year. Let's move on. Euro yen. Ooh, look at that. Euro yen. I'm waiting for an entry on this, guys. This is a bat pattern. You can see I've got an alert up here. This is looking really good for me because we've come up to structure. We are massively overbought here at 91. I am quite simply going to be waiting for an entry reason like a double top or a head and shoulders. Look like I'm going to get one, but we are still not quite there. So watch out for the back bottom. Not going to go into details regarding that. All that information is free within the educational material. Let's move on to something different. Pound dollar, we have a back pattern there as well. Euro dollar, Gartley pattern is just one. But this is interesting. Okay, it's not something I can get involved with, but I was rubbing my hands together thinking, yes, A to B to C to C, sorry, X to A to B to C to D, and I'd be looking down here within the wicks, within structure for a double bottom, and we are consolidating at this psychological number with the RSI oversold and divergence. Drop down to the 15, but it's not valid, guys, which is a real shame. Just before I do that, though, I'm going to show you why it's not valid, but then I'm going to show you how you can still get involved with this trade. So X to A, we do not hit a 50% fib retracement. I fall short by a couple of pips. Check your data if it's valid for you. You've got an entry right now, but for me it's not. It is only valid from this leg. And the problem is, if I take it from that leg, you can see we do hit the 50% if computer wants to catch up with my mouse movement. We've violated structure to the downside here. So that's a no-go. So no advanced pattern, but as I've just shown you here, down to the 15, looks like there's a double bottom at this area, certainly holding that structure level. And if you go down to a 5, you have a very nice little opportunity right now. Right now, guys, look at this. Beautiful confirmed double bottom right here. Could even be a head and shoulders, guys, looking at this. Move lower, pull, come on, pull back, move lower, double bottom, move higher. Okay, violated our level of structure. I would personally wait for a 26.18 as the entry, so I'd wait for price to come just a little lower, down to that 61.8 fib. So that would bring you, say, down to here. Get involved with the trade, and boom, I would ride it all the way up to this level just here, giving you a lovely head and shoulders. Only on the 5-minute, guys, but if you got your entry here, you're still looking at a lovely 57 pips for probably around 25, so a good 2-to-1 reward to risk. Moving on, covering quite a few things here, guys. Aussie dollar CAD, potential flag pattern. I'm not completely happy with it, to be honest, so I'm going to be waiting for a break of the channel and an entry reason. New Zealand yen, nothing. New Zealand dollar, nothing. Dollar yen, I'm not going to do the full underwriting, but look at this structure level, guys, that we have just violated. 1, 2, 3, 4, 5. Boom. Look for a pullback and a chance to get long on the dollar yen. Aussie dollar yen, nothing. I think we're coming to the end of the pairs now. There should be one more. Pound yen, nothing. Aussie dollar, as you can see, I'm in the money. 7 pips up here on a 2-to-1 to targets, to first targets, and what are we, about 3-to-1 to second targets. I'll just quickly run through this. I have done a separate video for this already, but that's okay. So move higher, pull back, move higher, pull back. Where is our outside return? Here it is, right here. What happened within the outside return? Boom, a higher high, higher close candle, giving you an entry. Now, if I just zoom out a little, is there room for the market to go higher? Well, yes, there is. Look at the structure level right here. There is room for the market to go there. So just bring back on the orders. I am not playing for those extended targets, but I'm just going to drop down the time frames and talk through how I've managed to get a better entry. Because I'm that good. That is why. Down to the 240. Not a great deal here on the 240. what there is these tweezer bottoms right here, guys. This is what I was paying attention to. And as we drop down to the 60, you'll be able to see there's a little structure shelf here. So what happened? Move higher, pull back, move higher, pull back, move higher, pull back. So within this little internal level of structure, this is our outside return. And all we need is a higher high, higher close, which was here. So bring back on the orders. It has meant just here that my stops can go an ATR below the outside return. And I'm actually playing for targets, being a little bit safe here on this one, because I do think that we can go a lot higher, but the safest place for my stop would be right underneath this level, and I've not, so I'm being a little bit cautious with targets. We've got a nice little breakout pattern here. Typically these offer some form of resistance, so that's where I've got target ones. So I've got, in terms of risk, 16 pips of risk, target ones 40, so almost a 3-to-1. Target 2's all the way up here. This is actually based off the daily closes of the candles. That's 107. Currently 6 pips up. Let's see if we can get up there for those for that lovely almost 3-to-1 reward to risk. So that's it for the quick hit review video. I will be, now that I'm back, once I'm over the jet lag, starting to get back into the trading routine. Certainly, as I told everybody, come February, I will be trading, or at least showing you my trading of a percentage of the account. And again, in this instance, if this one comes off, it'll be a good 2.5-to-1. And again, the way I look at it is it's 2.5 losses I need to take. And since I'm really only taking those trades that have high probability, and this is high probability, guys. Why? Because 1, we've had a triple bottom. 2, we broke above it. 3, we have entered trend. 4, we have not reached our targets. Okay, high probability trades with good reward to risks. Doesn't mean it'll win, but I'm quite happy to be in this trade.